Inflation. Inflation and deflation do occur with any monetary system, even with currencies backed by 100% gold. What is inflation? At any given time, the unit of money, for example, a $100 note or an ounce of gold, can buy a certain amount of a given product and service. This is the result of the subtle perceived balance between the economic law of supply and demand. At any given time, there are a total of 1. A certain amount of printed money, the right of accessing money, debt, credit, and financial and non-financial assets on the demand side of the balance, and 2. The products and services available on the supply side. Inflation. Anytime the amount of liquidity, e.g., printed money, increases, while the supply side remains unchanged, inflation is created. Inflation is not the cause of rising prices, but an effect, consequence, and symptom of the artificially increased amount of money, or inflated demand. Inflation is exogenous. This means that in order to generate inflation, external factors must artificially intervene and manipulate the law of supply and demand in favor of the demand. The root cause of inflation in 2022 is generally the central banker's policy of supporting the demand side of economy through relentless injection of fresh money at zero interest rate since 2009. Inflation. Since 1983, the US dollar buying power is reduced by approximately $170. In other words, $270 in March 2021 had the same buying power as $100 in 1983. In other words, if you had saved a $100 note in your wallet from 1983 up to 2021, its buying power in 2021 would be equivalent of $37, hence it would have lost $63 buying power since then. Again, the injection of freshly printed money is the root cause of inflation. As a consequence, the price of goods and services goes automatically higher. Why? Because the increased level of demand forces consumers to compete against each other to attract the same level of product and services. Inflation. In order for the Fed to achieve its target inflation rate of 2% since 2009, it has to achieve two goals. 1. First, it has to print an amount of dollar notes to compensate for the assumed deflationary pressure of something like 7 to 10%. 2. Then, it has to print an additional 2% dollar notes to achieve its target of 2% inflation. In other words, it has to print a total of some 9 to 12% of GDP of fresh money. Based on above assumption, the Fed has recently injected a colossal amount of fresh money in the financial system. In economics, there is no free lunch. The high rate of inflation in 2022 is a direct consequence of sins committed from 2009 to 2021.